Many of you probably remember that it used to be the big five accounting firms. Remember Price, Waterhouse, Coopers, PwC, KPMG, Ernst & Young, Deloitte & Touche, now Deloitte, and Arthur Andersen. Arthur Andersen collapsed, one of the big five accounting firms, after Enron. We're going back to 2001, 2002 timeframe now. So it turned the big five into the big four, okay? We have PwC, KPMG, Ernst & Young, EY, and now Deloitte. So what happened to the Arthur Andersen firm? I'm going to jump into an insane story that I just saw out of Financial Times yesterday that ties into this private credit fiasco I've been sharing for weeks now on the channel. So Arthur Andersen, they blew up because they were doing Enron's auditing and they were doing Enron's consulting. So they blurred the line between being an auditor and being a consultant. All right, so they audited Enron's financial statements. They sold very lucrative consulting to Enron, and they also helped to evaluate and enhance the structures that they later audited. Okay, so their fee dependence basically completely did away with any independence that they would have had as an auditing firm. Okay, so they were making so much money off consulting that they were not, let's say, willing to challenge the bad accounting that was happening inside Enron. So the accounting fraud inside Enron required kind of like an easy auditor, right? Someone that would look the other way. What they were doing, right now we're seeing the same thing. They were approving these special purpose entities, the SPEs, off-balance sheet vehicles. They were signing off on crazy, absurd valuations. Meanwhile, they were earning massive consultant fees while doing that. So we know what happened. Enron blew up. Arthur Andersen blew up. The markets got hit. And there was some regulation that came out on the heels of that saying, look, we have to have these big accounting firms, the ones that survived, maintain this independence. So if they're going to audit, they can't also consult. So they came up with this Sarbanes-Oxley Act of 2002, the SOX. I'm not going to dig into that. But basically, it put a bunch of restrictions on the accounting firms where they had to stay independent. They could not blur the line. So Arthur Andersen gone. We have a big scandals come out in the last couple of weeks involving PwC, PricewaterhouseCoopers, because they're now they were fined. There's a story out of international tax revenue. Before I jump into it, as I always humbly ask, please subscribe, guys, to the channel if you're not subscribed. Appreciate you being here. Welcome to all the new subscribers. Let's keep growing the community, okay? Hit the subscribe button for me. Thank you. So this is out of International Tax Review yesterday. It says, recent news of job cuts at Ernst & Young is symptomatic of how the PwC controversy has tarnished the reputation of the entire Big Four. You might say, well, what's that controversy? Here it is. Chinese regulators recently suspended PwC China for 6 months. They fined the company $62 million for audit failures relating to none other than Evergrande. Remember Evergrande? Evergrande was one of China's largest property developers. They became massively indebted, it says, as they borrowed money to build huge high-rises nationwide in China in 2021. They defaulted on their debts, and they filed for bankruptcy in 2023. But here's the kicker. For years, PwC, Evergrande's auditor, turned a blind eye, it says, and even tolerated fraudulent activities during audits in 2019 and 2020. Evergrande overstated its revenues by $78 billion between 2018 and 2020, and PwC issued false audit reports portraying a healthy financial state. Auditors reported properties as completed when they were still vacant land during inspections. The Chinese regulator found that 88%, listen to this, of PwC's observations about Evergrande's projects were fabricated or inaccurate, and PwC excluded specific properties from audits at Evergrande's request. Okay, so what the article says is it went far beyond negligence. It was aiding and abetting fraud. So they got stung by the Chinese authorities. So why, you might say, well, Matt, why is this important now? You're talking about stuff that happened in 2002 with Enron and back going to Evergrande a couple of years ago. It's important because you see a story out of Financial Times, I think it was yesterday morning or the day before. And the title of the story, and again, I almost choked on my coffee on this one also, is SEC, Securities Exchange Commission, weighs looser independence rules for Big Four auditors. Okay? And this is insane. We know what's happening with private credit assets. I've been sharing for weeks now, day after day, sometimes more than one video a day about the private credit thing coming on the scene really in the last couple of months explosively. It's past $2 trillion right now in the system. They're saying private credit deals account for 11% of GDP, okay, in the United States. And it's projected to surpass $3 trillion in the next couple of years. All right, so what's happening? Why is the SEC considering bending a knee now to the Big Four, even with all the bad stuff that we know has happened and will happen again if they do so? Number one, they're blind to the leverage, the valuations, the internal risk models, all of the off-balance sheet financing, the NDFI exposure, non-depository financial institutions, the data center infrastructure loans, been covering those almost daily, the insurance exposures, the New York Lifes, all these life insurance companies putting money into these private credit models, and then the collateralized loan obligation structures we've also been sharing. Okay, so the SEC is saying, look, it's exploding, and we don't know what's going on. So the Big Four coming, they have a huge audit, right? They have a huge lobby. They're coming in and saying, look, and so the SEC is saying, well, we're either going to work with you or against you. We need you closer on these Big Four so you can have an eye on what's going on. Again, because it presents systemic risk. And I don't mean just the United States. This is called global systemic risk, guys. I'm telling you, the private credit is going to bring the whole system down, all right? And so what, in essence, the Big Four accounting firms are saying is we cannot audit, under the current rules, we cannot audit the entities and also advise them on valuation, risk, and their debt modeling, all right? So this comes back to the fact that the private credit monster, okay, now is so complex that the Big Four accounting firms are saying, fine, SEC, you can't have it both ways. And if you want us to kind of assist with being on the inside of this thing, you need to relax the same rules that were put in place to prevent another Arthur Andersen, right? So what's the reason why it's important in the context of private credit? If you watch my shows last few weeks, you'll have the background on this. These loans are illiquid. They are heavily dealt with yesterday, COV-lite or covenant-lite loans. Okay, so the borrowers don't have to have the same level of reporting requirements. They don't have to really do much until they start to get into massive trouble overextending themselves in the lines of credit. And of course, this stuff is off balance sheet, off spreadsheet thing. So we have a situation where there is a systemic valuation risk. It's right now playing out in real time in the AI stuff, okay? How these valuations are based off future perfection in terms of the productivity and revenues that the markets are banking on these AI data centers generating, okay? So what the Big Four is saying is, look, you've got to loosen the independence rules on us if you want us to get involved in this and try to stave off. And you're going to say, well, wait a minute, isn't this again kind of the fox guard in the hen house? Absolutely it is. It's the same situation as you saw with Arthur Andersen explained, same situation you had with PwC in China with Evergrande. And those were all major collapses. And they did affect the markets, guys. They affected stocks. They affected real property asset values. We're going to have the same thing again, times 10 or times 100 or times 1,000, all right? So it's interesting, the timing of this. If you look at all the shows I've been doing the last couple of weeks, why are the Big Four kind of pushing this now? And it's interesting because you have credit spreads, right, widening. We covered the credit default swap sales that are skyrocketing now to hedge against the collapse. We know that the balance sheet leverage is exploding. The insurance companies are piling into private credit. The NDFIs are basically overexposed, structurally overexposed. It's a disaster because the collateral, in many instances, doesn't even exist, or it's been hypothecated several times over. And you have pension funds, right? People's retirement monies, pension funds piling in, billions and billions into these private credit structures. Look, you have JP Morgan out the other day saying, look, we're encouraging our clients now to reallocate their portfolios into private credit because they're not getting enough from the stock market. So the Big Four have come to the SEC and said, we cannot advise these groups and perform all these roles unless you allow us to also consult. And of course, they're going to generate massive fees to consult. Consulting fees are massively more lucrative than audit fees for these Big Four. Okay, so we are right back in the soup, so to speak, with that's the reason for the thumbnail today. They're playing with fire, but it's also like the final piece, I think, of this puzzle, because once you get the Big Four, they basically have free reign, and the SEC kind of turning a blind eye because they're trying to decide what's the lesser of two evils, that we have no idea what's going on, or that we have some idea what's going on and try to somehow curtail it that way by playing ball, so to speak, with the Big Four accounting groups, right? So anyway, it's nasty. Okay, I'd love to get your thoughts, your comments. If you enjoy the content, leave me a like. If you're not subscribed, please subscribe. This is just getting going. We're going to cover it for the next months, years, whatever, as this stuff starts to collapse. Now you've got the Big Four lobbying the SEC, and apparently it's not a done deal yet, but apparently it's going to happen, and they're going to relax all these independence restrictions, which is going to further, let's say, assist with what I believe is going to be this thing blowing up in the near future. Okay, again, appreciate you guys. Thanks for being here. With that being said, I'll talk to y'all soon. Bye.